Welcome everyone to another edition of our weekly meetup. Tonight we got Aaron Warwick presenting a new stock. Quick disclaimer first, Story Trading is not an investment advisor. Investing in securities involves significant risk and loss. Portions of this recording will be published on social media. We'll be excluding the Q&A session from social media. That'll only be available for VIP members, as well as the trade of the week. As we know, Story Trading is an investor network. We crowdsource on collaboration around the 4 pillars of fundamentals, sentiment, catalysts, and technicals to understand the story behind the trade. And we do these Zoom events for members to get an extra edge. So our agenda today, we're going to do a quick performance review of our VIP picks. Then Aaron will present IRIX, go over our upcoming events, and then we'll do trade of the week. So as far as our VIP picks, if you hop over to storytrading.com at any time, you can do that and click on performance. And I just want to point out here, there's a tab for return by presenter. And we can see Aaron Warwick has a great track record, 6 picks. This will be a 7th, 57% return over an average of 105 days. It's almost 200% annualized. So congratulations, Aaron. You've certainly built up a lot of credibility with our community. So with that, we're going to turn it over to you, Aaron. You should have rights to start your video or screen share, whatever you need to do.
Yeah, good evening. How are you, Ben, and everyone else?
Awesome.
Hope you're well.
Thanks.
Good. So tonight I'm presenting on a company called Iridex, IRIX. And I'm going to actually I plan to post in the VIP rooms my sort of overview and thesis on this company for people to review. But to give you some background first, Iridex is actually a 30-plus-year-old company. So they're, unlike a lot of our names, they're not new. And they've long been a worldwide leader in retina lasers and delivery devices. And so while they have been an innovator in that field, what's actually really exciting about what they're doing now is not on the retina side, it's on glaucoma, which is something new to them. And specifically what they're using is something very similar to what they use for the retina, which is their micropulse technology, which breaks a laser into pulses. So they deliver energy. This laser delivers energy without burning the tissue. And so what makes Iridex an attractive investment this time is how lucrative the glaucoma market can be. And I'll explain a little bit of that soon. But it turns out anyway that this retina micropulse technology can also help with glaucoma. Now, part of the reason that glaucoma is what I call a lucrative market is that there's no cure for glaucoma at this time. It's a progressive disease, can eventually lead to blindness. And even for those who never go blind, it can be debilitating, frustrating, annoying disease. So the current treatment options for glaucoma, there are several options. Again, no cure, but you can do things to treat it that would basically delay some of the, mitigate some of these symptoms, delay them so that you don't have them, for a few years down the line and so forth. But the current standard of care right now in the US is eye drops. So there's lots of different eye drops out there on the market. And as the glaucoma progresses, patient can use up to 3 to 4 eye drops. And again, they address the symptoms. Eye drops also, though, they can cause red eyes, sunken eyes. I have a good friend actually that's got glaucoma in one eye, and you can really tell like that one eye because of the eye drops. It looks so much different than the other eye, and also they're expensive. Another treatment option that's actually fairly new is provided by a company called Glaucos. GKOS is their ticker symbol. And we'll start getting in a little bit now why I say that glaucoma is a lucrative market. So Glaucos is valued right now at 17 times sales. So it's like a tech company basically, and it's growing at 30% a year. If I remember right, I'd have to look it up again. If I remember right, they're still losing a significant amount of money. So what Glaukos does, they make an implant that helps to drain or relieve pressure in the eye. And the doctors put these in often concurrently with when they do cataract surgery. So it makes it like extremely lucrative. I don't know if any of you are aware of, how lucrative cataract surgery is, but then you add in this Glaukos device and it's a double whammy for these doctors. So it is expensive. It's also, of course, invasive, and eventually it also quits working. And so that's where Iridex comes in. Now, to be fair, Iridex does not have a cure either. I'm not saying that at all. But they do have this laser technology that I think is superior for a couple of reasons. First of all, it's at least as effective, if not more effective, than the other treatments. It's also non-invasive. And in fact, the treatment itself only takes, I think it's like a minute or two per eye at the most. And you can also do treatments every couple of years for at least a decade. The other thing is that the treatment can be done, the Iridex treatment can be done if the other treatments fail. And so that, in a sense, they're not truly or fully competitors with Glaukos or with eye drops. So, and even you could even use them concurrently, is my understanding. So if you go back and look, I don't know, Ben, if you put up the chart for Glaukos or if that was Iridex, but if you go back and look at Iridex was flying high like 5 years ago, I think it was, when the market realized, that they had this revolutionary approach to treating glaucoma. But the company really botched it at that time. And there were two main problems. The first problem was the design of their initial glaucoma probe. It was just straight up flawed. It required a steep learning curve and precision by the doctor in order to be effective. It was a huge complaint. It took a lot of time to learn, and they had to be extremely precise. And then second, retina and glaucoma sales are two totally different worlds. You would think like it's the eye, right? But it's totally different. So in retina, you don't need, if you're selling, like with Iridex selling into the retina business, you don't need regular contact with the client. It's just be occasional, check in with them, pick up the phone, go by and see them, maybe every year or so you actually make an in-person visit. But in glaucoma, it's different because it's, and this is part of, again, what makes it a lucrative model is it follows a razor blade model. So you have the equipment, and then you have disposables. And so you need regular contact with the client, and Iridex wasn't used to that. And they didn't have a dedicated sales team to glaucoma. So long story short, Iridex burns through a bunch of cash to sell a promising, but what was ultimately a flawed product. And the market just capitulated on the stock and the company. You can see even like, I think as late as December, the company was under $2 a share. Today, I think it closed like $7.20 or something like that the other day. And we'll talk about what happened to get them there. And then really the reason that it was so lowly, such a low valuation though, was because there was the market expected dilutive offering due to the cash burn. So what happened is there was some new management, some new board members, and the new CEO, the current CEO, but new at that time, helped to implement a board mandate to cut down on the cash burn. And the CEO did that. And in 2020, amidst a global pandemic, for a time, probably all U.S. eye doctors were closed. And many throughout the world, they managed to bring down their burn rate to $1 million in 2020. To give some perspective, I think they ended the year with like 11 million on the books, or 8. I don't remember, somewhere between 8 and 11. But anyhow, what's also happened is Iridex went back to work, and they've redesigned this glaucoma device based on the physician feedback that they had received, and they've made it more ergonomic and much more simple to use. You don't need much training, and you don't have to be so precise because the equipment does it for you. Things are built in now. And so the stock, as I said, in December was really depressed, like $1.75, $2. The reason it started to go up is because Iridex, the stock turned a corner when Iridex released their Q4 results. And there were two things that stood out from that. Number one, the cash burn I told you about went down to only $1 million for the entire year amidst the pandemic. And so this really minimized the threat of a dilutive raise. And then second, and I think just as important, if not more important, and I'm going to talk about this in a minute, why I think their Q1 will be so solid, is that they had record sales of glaucoma probes in Q3 and Q4, indicating a broader acceptance of this new device. So the redesign seems to have fixed the earlier problems. And it's not just me that, that noticed that, because back in, I think it was March, Iridex announced a strategic collaboration with Topcon, which is an enormous Japanese company who actually approached Iridex. That's what was interesting. That was in the press release. If you look at it closely, and I followed up and found out that is the case. So this Japanese company actually approached Iridex about partnering. And honestly, it's the best deal I've ever seen a small cap make. We've all been through this, like this bad deals that small caps make. Okay, so to give you an idea, like I said, so this deal was in March. In December of 2020, it was like, again, $1.50 and $2 a share, something like that. Well, obviously, if you look at, and you'll see, I have the link to their news release and that information I'm going to post later. But if you take a look at that, it's obvious that like this deal didn't just happen overnight. So Topcon, seeing what happened to Iridex's share price, still didn't back away. And they still acquired 10% of Iridex's company, and they paid $6.18 a share to acquire that after it had already quadrupled off the December lows. And in addition to that, so in addition to buying the 10% of the company, they also paid Iridex extra money to have the right to distribute Iridex's products in the parts of the world where Topcon is stronger than Iridex in terms of distribution. And then Iridex is going to distribute one of Topcon's products where Iridex is stronger. So in total, Iridex ended up, again, they had $1 million burn rate in 2020 amidst the pandemic. And Iridex ended up netting $19.5 million from this Topcon deal. So they now have $31 million of cash on their books. So, I mean, there's no need to have a capital raise at this point. So why would Topcon do this? That's the question that I looked into. And certainly it's not for the retina market. That's been very stable. They're projecting some growth from last year and a little bit of growth from 2019, it sounds like, but that's never going to be like a lucrative business. It's clear that, while it will be a steady income stream for them and it is profitable, Topcon is paying because they see the potential of Iridex in the glaucoma market. Quite frankly, I think that Topcon, in acquiring 10% and doing this distribution deal is just trying to see how things go with Iridex before they probably end up just straight up acquiring the entire company. But in any case, you now have the number 1 and number 2 products in retina in the worldwide laser products that are going to distribute each other's products in the place where they are the strongest, where they're each the strongest. In addition to that, Iridex now has all this cash. So what are they going to do? Well, this is one of the things Mark Gomes has taught us a lot about too. does a company need cash or do they want cash? In the case of Iridex, they'd actually gotten their burn rate down to the point where they didn't need it. They wanted cash and they were interested in this deal with TopCon because it's good for them. But also in addition to that, the cash is going to give them an opportunity to develop a sales and marketing strategy that's specific to glaucoma. Because again, as I mentioned earlier, you need a dedicated team. It's totally different than retina. So valuation wise, a couple of things that and again, this is in the document that I'm going to post in the VIP rooms, but I separate three things out in the way that I'm valuing Iridex right now. This is just right now, not even talking about the future, which could be even better. But so they have $31 million of cash on hand. I assume, that by the time they get back to cash flow neutral with the increasing their sales team and all of that, I'm just being conservative and assuming, that they'll end up with $19 million back in cash, but, so they're going to burn through, 12 million to get to that point where glaucoma could be big. I'm not saying it's probably not probable. I'm trying to be conservative. On the retina side of things, they got 39 million in sales using the 2019 numbers. It's likely that 2021 is going to be higher than that. But right now, the analysts value that business, and I think it's fair, about 1.5 times sales. So you got 58.5 million. So glaucoma is where it gets interesting. As I mentioned, Glaukos is 17 times sales. For some reason, I don't understand why analysts are currently valuing Iridex at 5 times sale on the glaucoma side. But that was before the TopCon deal. And also it's before these Q3, Q4 numbers came out about how Iridex seems to be like really on track now with the glaucoma product. So in my model that I'm using, I decided to value them at 7.5 sales, less than half of what Glaukos is right now. And again, keep in mind, this is a razor blade model. In 2019, glaucoma was a $13 million business. I think that'll be a lot higher pretty soon, but I'm just using that as a basis, and that gets me to 97.5 million. So if you add these up, 19 million cash, 58.5 million evaluation for retina, 97.5 million, you get $175 million market cap. Okay, that would be about 12.25 per share. Right now, it's been trading around the $7 range. So I think that once the market picks up on the fact that Iridex's product is working, the glaucoma product is working, they're going to give significant higher valuation to the glaucoma side of things. And again, that's just using 2019 numbers, which I think that they're probably likely to beat in 2021, probably pretty significantly, actually. Just real quick, on the risk side of things, you got competition. I already mentioned some of the big competitors. Obviously, the flawed rolled out, the history of that could be a headwind for them. They still have to develop this comprehensive sales and marketing approach. So that's something new for them. And then, you got the partnership dynamics. I mean, you got a huge company in TopCon and a small company with Iridex. You've got an American company with Iridex, a Japanese company with TopCon. So there could be cultural things related to those types of things. But I think the biggest risk before was a dilutive raise, and that's now off the table for years at least, and probably unlikely to be needed again. So long story short, Iridex now has a lot of money in the bank. I can't remember now. I don't have it pulled up what their current market cap is, but a significant amount of that is in cash. And like I said, just based upon 2019 sales, which again, I think is like a worst case scenario probably for them in both retina and glaucoma. And the valuation that I used, I have them at $12.25 a share. So even though they've quadrupled since December, I think that TopCon really, I think, gives a floor there at 618 a share. I don't see much downside risk beyond that, but I see a lot of upside. And then, of course, you know, when you start talking about ramping up sales, I think number one, they'll get a higher, I mean, number one, you have more sales. So that helps your valuation. And then number two, I think they'll start giving them a higher multiple because that's that razor blade model, high margin business. And glaucoma is a huge issue that, again, to which there's no cure. So with that, I'm happy to take any questions that you all might have.
Great. Thank you, Aaron, for that presentation. I got a couple questions for you. I think you mentioned TAM, but I missed it. What was the total addressable market here?
I didn't mention TAM. No, sorry.
Okay.
I don't have that off the top. I'd have to go look.
Okay.
I mean, I know that put it this way, it's a lot higher than the 13 million that they did. I'll try to look up Glaukos here while you're asking another question and see what
okay. The other thing I wanted to know is how can we independently monitor the channel checks here that from both a qualitative basis first, like what's better, right, about this new product? What problems do they fix? How can we independently verify that the market is looking at that and say, yeah, these problems are fixed and we like this product, like from a qualitative perspective? And then how can we quantitatively follow that and do some channel checks so we can be a little bit ahead of the market before the report,
if
possible? Yeah.
So to get back to your first question about TAM, now I don't know, the cost differences and all that, but excuse me, what I can tell you is that right now, 2021, Glaukos is projected to do just under 300 million in sales. And then 2022, they're saying, analysts are saying over 350 million in sales. So, I mean, it just gives you an idea that the TAM is multiples higher, significant multiples higher than what they're at now. Getting back to your other question, yeah, that's a tough one. I mean, I would, for our sake, I wish that it was all like Smith Micro back in the day when they rolled out the Sprint, where we could just go to the stores and, we could figure all that stuff out. But no, it's tough to do. I did. So, I mean, I would say, talk to people that specialize in retina. If you happen to find any doctors that or that, people know, which is tough. I mean, not that many eye doctors specialize in retina. I actually have a friend of a friend that does, and he's familiar with Iridex. He says, that he has used their products and likes the micropulse technology, and that's what they're using on. So the technology itself is not new. It's just how they're using it. But the only way that I can think of, and I'm happy if someone else can figure something out, but the only thing I can think of is, like I said, I'm looking at the number of probes that were ordered in Q3 and Q4, and record number indicates to me that their market is saying, hey, this is working, because they're ordering more. Again, those are disposables. So that means that they're actually, they're using the product, they're using the equipment. Okay. So that's what I'm paying close attention to, even more than like the revenue numbers for a given quarter. I mean, because that's a lagging, the future indicator is, are they selling more probes? And so when you see they have a record quarter followed by another record quarter, then that's indicating, the doctors are using these now.
All right, got it. So let's open it up for questions. If you have one, you can put it in the chat or raise your hand. Just as a reminder, the Q&A is not going to go up on our social media. We are recording still now, but that's for our current VIP members, so you don't have to be shy or anything. Right up at time here to again the trade of the week. Any final questions or comments? I think we're good. So Aaron, appreciate that great presentation once again.
Thank you for having me, guys. Good questions too.
Yeah, we got just want to remind everyone, we do have an IRIX research group that has already been opened. So Stephen will drop that link into the VIP room if you're not in it already, so you can continue collaborating on IRIX over there. Going forward with our upcoming events, we're back to our happy hour schedule, Wednesday, 4:30 p.m. So we'll have that this week. And then next Sunday night, we're going to go back into Mace, because this was Greg Fisher's VIP pick a very short time ago. and it's already up very sharply, one of the fastest risers ever as a VIP pick. So we're going to do a deep dive to look at it again and kind of assess, is it still, something that's a good pick even at this price. So we'll talk about that next Sunday. And just follow us. Make sure to follow us on Twitter, YouTube. If you haven't already, please do that. StoryTrading.com. It helps us. StoryTrading is a handle on both those platforms. It helps us get the word out, especially when we post these presentations. We'll do so on a 7-day delay. Helps get the word out on the stocks that we all are interested in here. And with that, we're going to stop our video, stop our screen share, and move to Trade of the Week.